In this video, traders, we're going to look at why post-trade analysis is the holy grail in trading. Stay tuned. Hey traders and investors, a very warm welcome to you. And actually this is aimed at both traders and investors. This is a perfect one if you're involved in the financial markets or the crypto markets or any other speculation. Okay, so I think that post-trade analysis, post-investment analysis is the trading holy grail. Okay, and I'm going to say that because I think this is the one thing that you can do right now to have the biggest impact on your trading immediately and will have the biggest impact on your trading going forward. That's a pretty bold claim, right? Most people say there's no holy grail. I think that if you're not already doing post-trade analysis and you do it and you do it right, you will see good results from it. So let me tell you why. Okay, the first thing is and by the way, let me just define what we're talking about here. We're talking about noting down everything about your trade. We're talking about the actual reason you took the trade. We're talking about the type of day, your mindset, every single thing you think of. And it's really like a journal, and we can call it, some people call it a journal, and maybe a journal's more kind of talking about how you're feeling and stuff. But even if you're just doing it logically, i.e. if you're doing it just based on numbers, should I say, i.e. I'm long, I'm short, my win-loss ratio, my maximum adverse excursion, i.e. how far away the trade went against me, you know, how many winners I've got, percentage of winners, worse losers, aggregating the data, individualizing data, doing all that, just having that data there. Now, we go on and for hours about it. I've done another video about journaling and bits and pieces, and that's entirely up to you. I'm not going to tell you how you should do it. You kind of will know what you want to log. But I want to tell you in this video why it's so useful. I can't emphasize that enough, guys. Right. Identify strengths. Immediately, you're going to see you've got the data in front of you. You're looking at your trade log. You're looking at everything. You say, hey, I'm very good at trading this. And the first thing you do then is you do more of that. You say, hey, you know what, I'm making money there. Let me allocate more risk. Let me look for more of those setups. Let me look for more. Let me really power in on that. Whatever that may be, guys, whether that is trading after non-farm payrolls, for example, whether that's trading after earnings, whether that's trading the first hour of the day, the mid, whatever, you might identify a theme where, hey, actually, I'm very profitable. I've got a good hit rate here. I've got a high success rate. I'm making some money here. Right. I need to make sure that every single time that opportunity presents itself that's similar to those, I am on it and I consider whether I'm dialing up the risk on it. Of course, that's going to make a big impact to your bottom line. Okay, another one, most important one for most of us is identifies weaknesses. Straight away, you're going to say, hey, you know what? I'm really bad at trading that time, and it's going to be right there in front of you. See it. You won't see it unless you've got this log. You'll just think, stuff's not going right, but you identify weaknesses, and what do? We start to eliminate or reduce those weaknesses. Hey, I'm absolutely rubbish at trading the first hour. Do you know what? Don't trade the first hour then. Simple fix, or you work on that, improving that if you prefer to. Easy thing to do is just cut it off. There's plenty of opportunities elsewhere. So these are the two biggest things. And honestly, this is so overlooked because it's so easy and people are always looking for the next thing, the next strategy, this and the other, but just analyzing your own trades. Even if you're watching this video now, right, and you're brand new to trading, you've traded 15 times, just analyzing, or if you're watching this video, you've been trading for a decade, still just go back and have a look at your log, or start from now, if you haven't got a log, to create a log. And most of you have already got a log with your broker. All you've got to do now is download it, put an Excel sheet, write it down manually, start to add the extra bits of data that are useful, not just your P&L, which is all the broker cares about. It's stuff like the day of the week. It's stuff like what was the market. It's stuff like, hey, what size was this? What's my win-loss ratio on these specific days? Finding those patterns. All right, number 3, guys, is highlights bad habits. Similar to weaknesses, but this is kind of a habit that you will often see. For example, I noticed that I was very bad on a Monday morning at getting too aggressive too soon. Perhaps it was the weekend, you're itching to trade, you come in, I would trade way too early. Really, I would way too early, and often that would be a losing trade for me. So, easy solution. Sit on your hands, allow yourself to think about the market conditions. If something happens on a Monday morning and there's an opportunity, you miss it. You know, the best thing for me, which worked out nicely, was just to say, hey, you know what, Mondays, just chill out. Just get to the screen, relax, watch the market unfold, see what's going on, then start to put together, or start to add to your trading plan that you've already got. So start to put together a new trading plan, start to adjust it, start to tweak it. A massive difference just from the smallest little thing. So anyway, that's for me. For you, it could be something different. It could be, hey, I like to get involved straight after data and I get smashed with it, or Friday afternoon or afternoons I'm very, very weak because I'm starting to get a bit tired from the concentration. Whatever it is, you identify the bad habits. Cutting losers too soon. Perhaps you see you're kind of cutting winners too soon. Perhaps you notice, hey, last 10 trades, actually, you know what, I have cut these when in reality, if I'd left my limit in, 8 out of 10 of them would have hit my limit, which is an extra 15 ticks, whatever it may be. If you're day trading, swing trading, could be different. But at least you'll know then. So next time you do it, like, hey, don't pull it, don't cut it. If I, based on my data, on the information I've got, I need to hold this thing for extra 15 ticks. Good one, that. Okay, now next one we've got is forces reflection. Very often as traders, we're struggling, we're moving along, we're not getting where we want to be, and we just want to forget about it and get to the next trade. This forces us to reflect on what went wrong and how to avoid it. And sometimes, you know, we don't want to over dwell on mistakes, but we want to learn from them. The point is, if we make the mistakes, we can utilize them, even if they're financial mistakes, how to not repeat those mistakes in the future. And so forcing reflection allows you to do that, or forces you to actually review what's been going on so you can not make the mistakes again in the future. All right, allows for adjustments. So this is really allowing you to tweak and adjust things slightly that you wouldn't often know. I think I've told you guys a story. If you're a subscriber here, by the way, welcome back and appreciate your support. If you're not, consider subscribing. But I've mentioned in another video a time when, probably just 7 or 8 years ago, day trading the Dow very, very aggressively, I would have a tight stop and I was getting stopped out. Performance was quite poor. I was going through a period where it just wasn't working for me. I kind of analysed this, did this, and I thought, hey, you know what? If I just extend my stop by 30% more than what it was, a lot of those trades would be winners. So I did that, made a little adjustment, and it just changed everything. And of course, without that knowledge or log, I wouldn't have known that. I'd have just thought, oh, you know, I'm not a very good trader, my strategy's rubbish, I'm not very good. And you start going down trying to adjust all sorts of things. Maybe I need to tweak my indicators, my setups, my, you know, my time frame, the market I'm trading. You start going down complete different rabbit holes, when in reality all I needed to do was extend my stop by 30% and just change the game, reduce my position size to suit, and I'm away. And then when that works, I then started to work on actually getting a better entry so I could tighten my stop back up again. But without that small adjustment, I would have been off elsewhere, and who knows what would have happened. So just an example, guys, but same thing for you. You notice and you can allow for adjustments. Last one I've got for you is reduces negative emotions. This is powerful because we're all trying to protect our emotional capital in trading. We go through drawdown, we lose money, we feel frustrated, we feel angry, not getting where we want to be. Being able to look at this and say, you know what? It's not that bad. It's a couple of things that I'm doing wrong that I need to fix. Yes, you're trying to wrap it up in your account balance or how much you've lost for that week if you've not done so well, or month, or whatever it may be. But in actual fact, you can say, hey, you can actually see and say, well, if I'd reduced 3 of my worst losing trades, I'm profitable this week. And these 3 have this same characteristic. So if I eliminate that, the likelihood is I might well have a better week next week. And it's so powerful. So it stops you thinking in terms of everything's wrong, I need to fix everything, and I'm not dead disciplined on this, I'm doing this, I'm doing that, I've got this mistake. And you kind of wrap it up into a big ball of negativity. The good thing is you can identify and say, well, really, it's not that bad. I'm not actually that bad. I've taken reasonably good entries and I've done this, I've done that. I've identified the opportunities, but I just need to tweak to get them better for a trading perspective. All right, guys, so that's why I believe post-trade analysis is the holy grail in trading. I still think it is the one thing that will give you the biggest boost in your trading immediately and will help you get further in your trading moving ahead. All right, guys, take care. See you in the next one. Keep your risk managed. Bye-bye.